Hi everyone, welcome back to Crack Grade B. So let's start with our regulations from where we have left. We are doing the fund management regulations, and in that series we have to start with the environmental, social and the governance guidelines, right? So which FME has to follow these guidelines? It has been, this particular chapter before starting I shall warn you that there are so many terms, conditions, right, limits, fees, applications, etc. There are too much in this particular regulation. I don't think out of so many regulations that we have done for IFSCA, this is the most what you can say complex one. Fine. So you can find this is the most complex one. And now let's start. A fund management agency which is having asset under management above $3 billion as at the close of financial year or any other threshold as may be specified by the authority. So who has to follow with the environmental, social and governance norms? Such kind of FME which is having asset under management over and above $3 billion. What they have to identify? They have to identify that what are sustainability related risks, right? And they have to disclose in their annual report that what are the sustainability related risks in the fund managers investment strategies and processes where you are investing. What are the environmental, social and governance related risks into those particular investments? You have to identify them and you have to tell about them. Okay, now when we are done with that, next is other fund management activities like the portfolio management services. So who's the eligible fund management agency and fund management entity and the client? So portfolio management services, a registered FME may offer portfolio management services to its clients in terms of the as per these regulations, right? Now FME in its capacity as a portfolio manager may have the following categories as clients. So who all can become the clients of such a FME? Person resident outside India, non-resident Indian, non-individual, that means we are talking about an entity who is resident in India, who is eligible under FEMA to invest funds offshore, as well as the individual who is resident in India. FME operating as a portfolio manager shall be permitted to invest in securities as well as the financial products which are in India, IFSC or outside India. Fine. Now disclosures etc. it is fine. Now next is the portfolio management agreement. See, FME you are going to enter into a written agreement with the portfolio management client जिससे आप पैसा ले रहे हो, जिसका पैसा ले रहे हो, and you are going to invest in some securities in the portfolios. You have to do an agreement with that particular client, right? Funds can be withdrawn by the client before the maturity of the contract. Now client has given you the fund to invest in securities. Similar like portfolio management, kind of having the some features like mutual funds, right? There also you are taking the money from the investor and investing. So now in this particular case, when client can withdraw the funds before maturity, voluntary or compulsory termination of portfolio management services by the FME, suspension or cancellation of certificate of registration by the authority, bankruptcy or liquidation of the FME, in such cases the client can withdraw its fund before as well. Now dealing with client's fund, there are some norms, rules and regulations. Wait for a second. Yes. A fund management entity, they shall not accept fund from the clients worth less than $1,50,000, right? These are the minimum investment which is required from the client. Now next is FME shall segregate each portfolio management client's holding in the separate accounts. One client, one account. Just wait for a second. Yes. So FME is going to maintain the separate accounts for all the clients, right? FME shall not borrow funds or securities on behalf of client. You cannot borrow on behalf of client. You can only receive the funding from the client. The funds received from the client, investment, disinvestments, all the credits like dividend, bonus, etc., other things, they shall be properly reflected in the client's account. So nothing of very important. Now there are some investment restrictions. Let's see what are the investment restrictions. So the money or securities which are except, see, in this particular class, whatever I am pointing out, you have to remember only that particular point. Apart from that, what I am not specifying, you can skip it, fine. But I have made this document. See, every student has got a different sort of need. One wants to read in detail, one wants to read crisp. So by understanding all of your needs, we have made the document whatever we have felt that at most important, medium importance, and of low importance. In this particular class, I am going to cover utmost important and medium important, fine. So the investment restrictions, the money securities accepted by the FME, they shall be invested, managed in the portfolio management agreement. They shall not use the portfolio of its client in derivatives until and unless you have obtained the consent of the client. FME shall purchase or sell securities separately for the each client. Okay. They shall segregate each client's fund and portfolio securities and keep items separately from its own fund. Now, this is the difference between the venture capital fund and the other funds. And over here, the portfolio management services, they are provided client wise, right? So a client is having a fund, now the services are provided to them separately. Whereas in venture capital fund, what we were doing, we were accumulating all the fund into a corpus, right? So this is the difference over here. FME shall not hold the securities belonging to the portfolio account in its own name, right? So obviously, if you have done the investment on behalf of client, then you should record it on the behalf of client. Next is the advisory services. So you can also provide advisory services being an FME, but you have to comply with the capital market intermediaries regulations that we have already read. Okay, wait for a second. See, FME advisory services are for a portfolio not less than the US dollar 1,50,000. You can provide the advisory services, but you have to comply with the capital market intermediaries regulation already covered by us. Comply with the code of conduct under the capital market intermediaries regulation. So if you are complying with these particular regulation, you do not want to manage, but you just want to provide the advice, fine. One thing is doing the what you can say portfolio management, and the other thing is just advising. So you can do the advisory services also, but you have to comply with this particular regulation. Now we have investment trusts. Investment trusts in the IFSC. Now what happens in investment trust? See, you are a person, you are giving your money, fine. These investment trusts are that they invest like in infrastructure, in real estates, fine. So, but the manner of their operation is they are a trust. We'll get to know more about them. So let's start understanding them. Any person from IFSC, India or a foreign jurisdiction who desires to operate an investment trust shall obtain the registration with the authority, right? An investment trust is permitted to raise funds. Now, investment trust can do public issue also and get its unit listed, can do private placement with units listed, and can do private placement with units which are not proposed to be listed. All three options are there. Now, public issue and listed, you guys understand. But what is private placement and units listed? See, public issue is when you are giving your securities or your units to the public as a whole. Private placement means when you are giving to just selected individuals, right? So this is the difference. And listing and non-listing is a separate thing. This is not a case that in private placement you are not going to list the securities. Fine, that is one of the option. In case of private placement also, you can go and list your securities in the exchange. Why? Because देखो, जिनको आपने प्राइवेट प्लेसमेंट में दिया होगा उनको भी तो से यूनिट सेल परचेज करनी होगी ना, उनको भी तो ये जो आपने दिया है असेट इसको सेल परचेज करना होगा. कैसे करेंगे वो अगर आप इसको लिस्टिंग नहीं कराओगे? सो आई मीन टू से दैट इफ you have privately placed these units, fine, in that particular case the persons who have taken the units into your investment trust, they also want to sell and purchase the units. So it is good if you get your units listed on the recognized stock exchange, and even if you do not, then all the options are available to you if you want to open an investment trust. Now let's see the definitions. See, eligible infrastructure projects means you are opening an investment trust. You are going to take money from the investors and you are going to invest in the assets. assets कौन सी assets? Infrastructure related assets like real estate related assets, completed residential or commercial properties, right? Or infrastructures like highways, bridges, or like that of infrastructure. Fine. So what is eligible infrastructure project in relation to these particular regulations? See, for public private partnership project, the infrastructure project is a completed and revenue generating project जिससे पैसा आने लगा हो, from a project from which we have started earning. The infrastructure project which has achieved commercial operation date and does not have the track record of revenue for operation of not less than 1 year. That means the commercialization has started and 1 year has happened. Please read these regulations very carefully. What they say is, does not have the track record for a period of not less than 1 year. Double negative, that means positive. It means they should be having a track record of more than 1 year of revenue generation. In case of not public private partnership projects, ठीक है, in those particular projects the infrastructure projects has received all the requisite approvals as well as the certifications for starting the construction of the project. So in that kind of project you can invest. Next is, which is the holding company? Holding company or means a company or LLP, any other structure as approved by the authority in which investment trust holds or proposes to hold a controlling interest and not less than 51%. So investment trust, if it is holding 51%, then that will be called as a holding company. Fine. Next, investment trust means a real estate investment trust or infrastructure investment trust, as the case may be. So these are the two kinds of investment trust that we have. Investment management agreement is, it means an agreement between the trustee and the investment manager. See, you are opening a trust. Fine, you are opening a trust. So trust में एक trustee भी होगा. What is the work of trustee? So trustee sees that whether the money which is being given in the trust is being utilized for the benefits of the people who have invested the money. Now investment manager कौन होता है? Investment manager is a fund management entity which is registered in this particular regulation, which is managing the assets. Fine. INVIT, that is Infrastructure Investment Trust. It means a trust which is registered under these particular regulations. Infrastructure Investment Trust assets means the assets owned by Infrastructure Investment Trust, whether directly or indirectly through holding company, includes all rights, interests and benefits. PPP project means which is undertaken under the public-private partnership. Pre-COD means commercial operation has not started. There are such projects in which commercial operations has not yet started, that are called as the pre-COD product. Pre-COD project. COD means commercial operations date as defined under the relevant project. But there are two conditions. It should have achieved at least 50% of the construction. कम से कम 50% काम तो हो गया होना चाहिए. And at least 50% of the amount should have been spent. 50% work should have been completed, 50% amount should have been spent. So this much work should have been done. Now next is the project manager. Project manager means a company or LLP or a body corporate which is designated as a project manager by the Infrastructure Investment Trust. Now real estate related assets means listed or unlisted debt securities and listed shares which are issued by the property corporation, mortgage based securities and other property firms which are incidental to the ownership of real estate. Real estate means your commercial properties, residential properties, right, where the shops have been opened, where the people live. These are called as the real estate properties. So if any debt or any, suppose there is a company, right, this company has taken debt from the market, debentures it has issued, and the purpose of this company is to construct the real estate properties like buildings. So this will be called as a real estate assets. Now REIT assets means real estate assets and any other asset which is held by the real estate investment trust. Okay. Now special purpose vehicle, what is a special purpose vehicle? Yes, special purpose vehicle means, see, it is a institution, it is a company or LLP or any other structure in which the investment trust or the holding company, they holds controlling interest and not less than the 51% of capital, which holds not less than the 80% of the assets directly in infrastructure projects and does not invest in the other SPVs. Right. So special purpose vehicle is like for a particular infrastructure asset or for a particular investment, you create a new entity. Special purpose vehicle which is being started for specially a infrastructure project. Right. Now, who is the sponsor? So sponsor means a company or LLP or body corporate which sets up the investment trust and is designated as such at the time of the application made. The person, the entity who has started investment trust, right? They are called as sponsors. What is the role of fund management entity in this? Fund management entity plays the role of managing the assets. Just that. Who has started this investment trust? So that is called as the sponsor. And trustee means the person who holds the assets of investment trust for the benefit of investors. He sees that there should not be any bad thing which is happening in the interest of investors. Correct. Now registration, once we have read all the kinds of definition, now we'll move very quickly. See, an application for grant of certificate of registration shall be made by the sponsor on behalf of trust in the format which is specified by the recognized stock exchange to the authority. Next is the trust. Now, what are the eligibility conditions for the trust? The trust should be created under the laws of India or foreign jurisdiction. The trust deed should have main objective as taking the activity of investment trust. Why you are making this particular trust? Because you want to invest in the infrastructure, right? So that should be your main goal. The persons who have been designated as sponsor, investment manager and trustee, all such persons are separate entities, right? So no one person or no one institution can be sponsor, investment manager also and trustee. All these three should be three different entities. This is what meant to be said. Now talking about the sponsors, eligibility conditions of your sponsor. See, the following are the eligibility conditions for a sponsor of an investment trust. Each sponsor shall hold and propose to hold not less than the 5% of number of units on post initial offer basis. You have granted the units to the public. Post issuance, you should hold at least 5%. Not less than 5% means at least 5% has to be held by you. Now, each sponsor who's starting the investment trust, they should have a net worth of not less than the 15 million US dollar. If it is a body corporate or a company, or net tangible assets of value not less than the USD 15 millions. If it is, in case it is a LLP, given that in case of REIT, each sponsor has a net worth of not less than the $3 million. So in case of REIT, it has been set 3 million, and in case of INVIT, that means Infrastructure Investment Trust, US dollar 15 million. Okay. So in case of REIT, each sponsor is going to have a net worth of not less than USD 3 million, and collectively, if you see on the collective basis, they should not have a net worth of not less than the US dollar 15 million. Sponsor or associate shall have a sound track record, that means an experience of at least 5 years in the development of the real estate or infrastructure. Now, who's going to be the investment manager? So in case you are doing private placement, any registered fund management entity can be eligible to be appointed as an investment manager. But अगर आप public issue कर रहे हैं, if you are doing public issue, then only a retail one registered FME. We have read about the FMEs, right? So a retail one FME, they will be eligible to act as an investment manager. Now trustee. The entity shall be authorized to be and registered as a trustee with authority. जिसको भी आप trustee appoint करना चाहते हैं, whomsoever you want to appoint as a trustee, they shall be registered as trustee with the authority. Plus they shall not be the associates of the sponsor or investment manager. Associate का मतलब क्या होता है? I am assuming that all of you know because we have read this multiple number of times in our previous video. Now, offer of units of investment trust. No initial offer. See how this is working. So investment trust is like that. You want to make a fund. ठीक है, आप एक fund बनाना चाहते हो. Correct. Now from where the money will come? You have to call investors. So just like you call investors to invest in case of issue of shares. Please remember the process of issuance of share. Whenever company is in the need of funds, what it does is it issues shares, right? So in the similar fashion, if you want to create an investment trust, the objective of this investment trust is to invest in other assets related to infrastructure. Right? What is the objective? Objective is to invest in other assets related to infrastructure. So no initial offer of units by the investment trust shall be made unless the investment trust is registered with the authority. So first of all, you have to take the registration. After that, the value of assets of investment trust should not be lesser than $75 million. Okay, great. And the offer size should not be less than the $35 million. So assets itni and offer size, these means for what amount you want the investment, it should not be less than the $35 million. Now minimum offer and allotment to public through an offer document. Offer document means the prospectus that we take in the issue of shares, right? Similarly, we have offer document also known as placement memorandum. In respect of investment trust which is listed on a recognized stock exchange shall be as follows. If your post issue share capital is less than $240 million, in that particular case minimum number of what needs to be offered, at least 25% of the total outstanding units of investment trust इतना आपको offer करना पड़ेगा. If your post issue capital is between this figure, then at least $60 million is what you have to offer to the public so that they can come and invest. And if your post issue capital is above than $600 million, in that particular case at least 10% of total outstanding units you have to offer. Okay, so these are also the requirements that you have to comply with. Once we are done with, now let's go and talk about, see, we have seen the three ways. There are three ways if a investment trust wants to go to the public or for the funding, they have three ways. Either public issue with the listing, private placement without listing, private placement with listing, right? So now we are going to read the terms and conditions that are given under the private placement with listing. So fundraising by an investment trust by way of private placement whose units are proposed to be listed. Now you have given the units to the investors and you also want that your units should be on the stock exchange, right? So this is what you are going to follow. Investment trust is required to obtain, first of all you have to take the in principle approval from the recognized stock exchange. Okay, after that through your investment manager or investment banker you have to file a placement of memorandum with the authority along with fee at least 5 working days prior to the opening of issue. This has to be filed in every case. Whenever you are seeking to get the funding, you have to file the placement memorandum. After that, the investment trust shall raise the funds from the accredited investors or from the investors who are raising not less than $1,50,000, not less than. That means such investors, you will take money from such investors who are investing above than 1,50,000. If a privately placed investment trust invests or proposes to invest less than 80% of value of assets of investment trust in completed and revenue generating assets, then the minimum investments from the investor shall be $1 million. Why? See, if investment trust says that हम सिर्फ 80% से कम we will invest lesser than 80% of our assets into completed infrastructure. See, completed infrastructure from which revenue has started generating. Okay? So if you listen to me very carefully, if you are investing more in the completed assets, then they will fetch you revenue, right? And risk will come down. So in that particular case, if investors give 1,50,000 US dollars, it is also good. But when you are not investing, you are investing lesser than 80% of your total assets into completed or revenue generating assets. That means your completed and revenue generating assets are less, hence your risk has gone up, and for covering that particular risk you have to take a more investment from the investors, and hence the minimum investment will be US dollar 1 million. Now next is, the investment trust shall raise funds from not less than 2 and not more than 1,000 investors. See, private placements means the number of investors is restricted. प्राइवेट प्लेसमेंट का मतलब नंबर ऑफ इन्वेस्टर्स आर रेस्ट्रिक्टेड. पब्लिक इशू का मतलब कितनों को भी दो. ठीक है. Investment trust through an investment manager shall file the final placement memorandum with the authority within a period of 10 working days from the date of listing. Once listing is completed, after that you have to file within 10 days. Now next is private placement without listing. So the fundraising by an investment trust by way of private placement whose units are not proposed to be listed. Now what are going to be the terms and conditions? So first of all, placement memorandum needs to be filed at least 5 working days. You don't have to take a in principle approval from the exchange, recognized stock exchange. Why? Because हम listing तो करवा ही नहीं रहे. We are not going for the listing. Now given that such opening of the issue shall not be at a later than 3 months. Fine. From the receipt of in principle approval. Next is, the investment trust shall raise the funds from the accredited investors or from the investors who are investing not less than the US dollar 2,50,000. वहाँ पे कितना था? 1,50,000. यहाँ पे है 2,50,000. The number of they can take funds from not more than the 50 investors. Now in the above case, when we were going for the listing, we could have taken the investment from at maximum 1,000 investors, right? 1,000 से तो ले सकते थे. 1,000 investors were the maximum. Here not more than 50. Why? Because you are doing private placement plus you are not even going for listing. So hence the number of investors have been reduced. Now the investment trust, they shall file the final placement memorandum with the authority within a period of 10 working days. Now next is the public issue. If you are going to issue through public issue, then what is going to be the rules and regulations? Let's just see that. So fundraising by an investment trust by way of public issue shall be subject to the compliance with the following. So investment trust, they shall raise funds by way of initial public offer and any subsequent issue of units after IPO. There may be by way of follow-on public offer, preferential allotment, qualified institutional placement, rights issue, bonus issue, etc., etc. You can take from all of that. Next is investment trust through the investment manager. They shall file a draft offer document, right, and the authority not less than the 30 working days before the filing of offer document. You are going for public issue, hence the time has been increased. The time of filing the offer document has been increased. The draft offer document filed with the authority shall be available for the public comments for not less than the 14 days. For 14 days, you have to keep the document in the public eye, so that if anyone is having any sort of grievances or any sort of what you can say questions, then they can ask. Authority may also communicate its comments to the investment manager or investment banker within the 21 days. That is fine. Next is, your offer document needs to be filed with the recognized stock exchange and the authority for not less than the 5 working days before opening of the offer. Okay. The initial offer or follow-on offer or right issue, they shall be made by the investment trust within a period of not more than 1 year from the date of issuance of observation by authority. Once authority has given you the approval, please issue कर दीजिए 1 साल के अंदर. So this is the time limit, this is the validity of the approval. This is for the time, this is the time limit within which your approval is valid. Initial offer, follow-on offer shall not be open for subscription for a period of more than 30 days. Now these are all what you can say, not very important regulations. Now investment trusts, they have to refund money if you are not able to obtain at least 90% of the fresh issue size, right? So you have to refund to applicants to the extent of oversubscription in case money is received in the excess of extent of oversubscription as specified in the offer document, right? It has been said over here that you can retain 25% oversubscription to the issue size, right? So there are some situations for which you can retain the oversubscription, but just that can be just 25%. Suppose I wanted to issue 10,000 units. Applications came for 20,000, 100% more, right? So I just can keep 25%. That means the 2,500 applications I'll keep in buffer, and for the rest of the people I will refund the money turant, right? And after that, what it will be happening? See, I wanted to issue 10,000 units, but I received 20,000 applications. So authority is saying, turant, in instant, you have to give back the money of 7,500 units who have applied for 7,500 units, and at the time of allotment, you can decide that, okay, people who have applied for 12,500, they can be given 10,000. So oversubscription up to 25% money can be kept for that, but rest of the money you have to refund. ठीक है? Next, see, whatever amount you have picked up, out of that particular amount, only 10% you can be used for general purpose, not more than that. Max to max 10% you can keep for general purpose, but the rest of the amount should be used for the purpose for which it has been raised. Now next is the offer document or placement memorandum. What will be the contents of offer document or placement memorandum? This is what has been written over here. See, introduction, who's the sponsor of this trust, who's the investment manager, who is the project manager, background of the investment trust, business details, leverage, that means what are the borrowings that you have done, any kind of conflict of interest or related party transactions that you want to disclose, fine, valuations of the assets, rights of unit holders, etc., etc. Now these disclosure requirements you can read on your own. These are nothing but just investment manager has to submit the yearly, half yearly reports about the investment trust that has been mentioned. Next is the investment conditions. आपने पैसा तो ले लिया. Till now we were reading that how you are going to raise the money from the public. Fine. Either private placement or public issue. But once you have taken the money, now how you are going to invest it? So this is what we are going to study. So let's see investment conditions. Investment can be in IFSC, India or foreign jurisdiction. An investment trust shall hold completed or rent generating property as the case may be for a period of not less than the 3 years from the date of purchase, right? If you are investing, then please invest for a period of at least 3 years in the rent generating property. For any sale of property, whether by investment trust, holding company or etc., if you are selling the property, then you have to take the approval if this sale is exceeding 10% of the value of investment trust, right? Whatever you are selling, if it is exceeding 10% of the value of investment trust, then you have to disclose. After that, you have to take the approval from the unit holders. An investment trust shall not invest in the units of other investment trust, right? If you are investing in debt securities, that will not be considered as will not be considered as lending. Next is the additional conditions in case of INVIT. So for an infrastructure investment trust, these are the some additional conditions. What are these conditions? So in case of public issue, if infrastructure investment trust goes for the public issue. Now real estate investment trust invests in the real estate assets, and infrastructure investment trust invests in infrastructure like power related infrastructure, highways, or your bridges, etc., etc. Fine. So public issue, if they go for public issue, then at least 80% of the assets shall be invested in the revenue generating projects. ठीक है, and not more than 20%. अब 80% तो revenue generating projects में चला जाएगा पैसा, then the rest of the 20% can be invested in these. Not more than 20% can be invested, because 80% तो definitely will go in revenue generating projects. So under construction infrastructure projects, listed or unlisted debts of companies which are in the infrastructure sector, equity shares of listed company which derive not less than 80% of their income from infrastructure sector. So even if you are investing in a company, in a securities, anything that is related to infrastructure, like you are investing in the equity shares of a company, but that company is having at least 80% of its income from the infrastructure related segment. ठीक, government securities, securities issued by the supranational agencies, money market instruments, etc., etc. And if you do the private placement, then where you can invest? If you are doing the private placement, then at least 80% of the value of assets should be in the projects, either directly or through the holding companies or through SPVs. Uninvested funds may be invested in the listed or unlisted debts of the company, equity shares of listed company, government securities, supranational agencies, money market instruments, etc., etc. Okay, so 80% in the eligible infrastructure projects, fine, and the rest of the 20% in all these kinds of projects. Now for real estate investment trust, they are going to invest in these kinds of securities. See, real estate properties, real estate related assets, securities of such local or foreign non-property corporations, government securities, securities issued by supranational agencies, cash and cash equivalent items. If you are going to do the public offer, then at least 75% of the real estate investment trust assets should be invested in the income producing real estate, which such real estate properties which are completed and which are income generating, and should not undertake the property development activities unless it intends to hold the developed property. Should not invest in the vacant land. This is also an important thing. Right? So should not invest in the vacant land. REIT are not allowed to invest. The total contract value of property development activities undertaken and investment in uncompleted property should not exceed the 10% of the REIT assets. Given that total contract value of such activities may exceed 10%, subject to maximum 25% of the REIT only if, see, it has been said that please do not invest more than 10% in the uncompleted property. Fine, but an exception has been given that you can invest more than 10% but up to 25%. That means more than 10% but up to 25% if the additional allowance of 15% is utilized for the redevelopment of existing property which has been held for at least 3 years and which will continue to hold for at least 3 years after the completion of redevelopment. It has obtained the specific approval of the unit holders. That means you can use the fund for such a property which needs to be redeveloped. Existing property which was not completed but you have held it for a period of 3 years. Suppose there was a property you invested in 3 years back, but still it is uncompleted. So such kind of property which has been there with you from the past 3 years, you can invest in that in order to complete it. Although it is an uncompleted property and you should not invest more than 10%, but still exception has been provided that you can invest more than 10% up to 25% if you have held the property for last 3 years and you are going to hold it for a next 3 years as well. ठीक है. For investment in debt securities or listed shares of local or foreign non-property corporations or government securities, not more than 5% of the REIT assets can be invested in one issuer's security. Should not derive more than 10% of revenue other than the rental payments, interest, dividends, and other similar payments from the investments. Okay. The investments in case of private placement should be in the compliance with the following requirements. If you are doing the private placement, in that particular case, at least 80% should be invested in the eligible properties, and the rest of the uninvested fund can be invested in the listed unlisted debts of the companies, equity shares of the listed companies which derive not less than the 80% of their property income from real estate sector, government securities, securities by supranational agencies, as well as money market instruments. Now, this particular part you can have just one time read, not very important. It talks about the distribution policy with respect to the distributions made by the trust and the holding company, etc. Right? So obviously when you are operating an investment trust, you are going to have certain incomes, etc. So these are talking about that. Not less than 90% of net distributable cash flow shall be distributed to the investment trust. 90% shall be going to the investment trust. Not less than 90% of your distributable cash flow shall be distributed of investment trust shall be distributed to the unit holders. What they are saying? आपने एक entity बनाई SPV, 90% of the income shall go to the trust, right? And whatever income this trust has received, out of that 90% shall go to the unit holders, not less than 90%. So this is the chain. With respect to the cash flows received by the holding company from underlying SPV, 100% of cash flows received by holding company shall be distributable to the investment trust, right? So such things are there, not very important. Please do not go till here. Just read that these two lines and this will be enough for you. Okay. Borrowings, etc. These are all one time read. We can do it. Chalo, let's do this borrowing and deferred payment. So the following provisions they shall apply to investment trust listed on the recognized stock exchange. Any investment trust whose units are listed on a recognized stock exchange may issue debt securities, right? The aggregate consolidated borrowings and deferred payments of investment trust net of cash and cash equivalent shall not exceed. They are talking about the debts, fine. So 70% of the value of your assets, 49% of the value of the real estate investment trust. These are what they have told you. Wait for a second. This they have told you that your aggregate borrowings, in case of an INBIT, that means infrastructure investment trust, shall not exceed 70%, right? And in case of a real estate assets, 49%, not more than. So whatever your assets valuation is, up to 49% can be the borrowings, but not more than that. Okay. And if aggregated consolidated borrowings and deferred payments holding company exceed 25% of the value of assets, for any further borrowing up to 49% shall obtain credit rating from credit rating agencies and seek approval of unit holders. See here what has been allowed, 70%, right? So if your consolidated borrowings has exceeded 25% of the value of assets, for any other further borrowing you have to take the credit rating. Okay. So for both you have to take the credit rating. Credit rating should be at least AAA or equivalent and utilize the funds only for the development of the infrastructure projects. Okay. So with that, now come up to next topic, that is family investment fund. There is a little clarification on family investment fund, so its document will also be provided separately, right? So under that, it has been discussed that who all formulates a family. Okay. So there is a document about that as well, and that can be discussed also. Now family investment funds, it could be set up in the IFSC. We have already talked that under this, the fund is established for the benefit of one family. The beneficiaries are identifiable based on the provisions of trust deed. Share of each beneficiary should be capable of being determined. Right here, the requirements on legal form and net worth shall not be applicable to a family investment funds. So we have seen for fund management agencies, we have seen that legal form is also required, that whether they can be a corporate LLP, as well as net worth criteria, 75,000 for authorized, remember that, 5 lakh for non-retail, like that. So that is not applicable on the family investment fund. Why? Because this is a fund which is used for a family. But a family investment fund, they should have a minimum corpus of $10 millions and within a period of 3 years from the date of obtaining of certificate of registration. So this should be within a period of 3 years, they have to maintain this much investment. The family investment fund could be open-ended or close-ended, and what are the permissible investments that they can do? Securities issued by the unlisted entities, securities listed or traded on stock exchange, money market instruments, debt securities, securitized debt instruments, derivatives, mutual funds, LLPs, physical assets like real estate, bullion, etc., and such other securities or financial products as specified by the authority. So this is what I wanted to discuss under the fund management. Angel funds, alternative investment funds, and a little bit clarification about your family investment fund. This will be discussed in really short time, but they are very small, so nothing much is there apart from few clarifications. So by that time, you please read this very carefully. There are few pages left on this in this particular document, 4-5 more pages. Those are not they are not even important, but I have just included them so that you can have a read of them. Apart from that, whatever was important has been completed till this particular point. Thank you so much for watching.